Yesterday, Daniel and I talked about the dichotomy, right? The contrast, the separation between companies in the same industry where in the past you saw all the companies go up, all the companies go down in industry. If it pulled back, some will go up a little bit more than others, but not now. You're looking at look at Walmart, strong. Home Depot, horrible. Meta, strong. Google, horrible over the past few months. Netflix, strong. Disney, falling off a cliff. GM, crushing the estimates. Ford, horrible. What do we see with Intel yesterday? Intel used to be a god, industry leader in semis. Greatest company. I mean, Kramer went there, knew the old CEO, I forgot his name. Oh, tip my tongue. Anyway, you guys know. But it was the company, Intel. They just cut its dividend yesterday for the first time in 23 years. I mean, this is a company that was basically funding AMD to stay alive because they would have a monopoly, and now AMD is bigger than them. But they clearly don't have the cash to pay its high dividend. But now you look at Nvidia. Where the hell did Nvidia come from? How come this wasn't Intel? So Nvidia got hammered last year during the NASDAQ meltdown, falling over 65%. It was $330 at its peak. And about 1 year, it fell to $112. It's more than 65%. This year, it opened up red hot, like most technology stocks. Stock ramped higher, was up 35% from its lows. Now, going into this quarter, investors were worried because Nvidia is a super crazy expensive stock in a new world where growth has slowed considerably, and most of these tech companies are doing what? They're laying off employees. So for the quarter, revenue is expected to come in $6 billion, but this was 20% less than what it generated in sales last year. Something that's not being mentioned. Oh, they beat the estimates this quarter, but they beat the estimates, but revenue down 60%. That's not a growth stock. That's not a growth stock. Should they deserve that multiple? So the stock is running higher, crazy expensive, 60 times forward earnings. So Nvidia needed to put up a good quarter, and they did. They did. Because the 60 times forward earnings, just to compare, the rest of the market trades at 18 times, and they're growing sales on average around 3-4%. Nvidia is trading at 3 times, more than 3 times that amount, and are seeing sales decline year over year by 20%, right? So they put up good numbers. They reported last night. Earnings came out, I think it was after 5 p.m., which is weird. Usually the longest they usually wait is like 30 minutes, some tech companies, but usually see them report right away. They have the numbers ready. I don't know why it took so long. It's just surprising. Probably made investors nervous. But earnings came in strong, 10% better than the estimates at 88 cents. They're expecting 80 cents. Sales came in mostly in line, but why is the stock surging up 14% today? Nvidia provided strong guidance almost across every sector, and also included higher margins. They also got inventory levels under control, which is a big problem for them. Basically, the gaming sector has bottomed. So they're expecting strong growth going forward. Expecting strong growth in data centers, like within cloud, that's kind of bottomed as well. Seen a decline there. And they said, hey, now China's reopened, we're seeing strong demand. Saw a huge growth in automotive. Expecting that to continue. By the way, that's an $11 billion pipeline. Nvidia has incredible growth potential here. And most importantly, the buzzword, right? AI. And these guys are the premium player in AI when it comes to hardware. They saw strong adoption for its H100 chip, which, by the way, read this. Chip is built with 80 billion transistors. Is that right? Did I read that right? I had to look at 2 different sites that said that. Is that right? Anyway, it's using Taiwan Semi's 4N processor, but this chip by far is the world's most advanced. No one's even close to it. And it's powering the massive adoption of AI. They're seeing sales of this chip start to explode. So they reported these good results while also managing costs and exiting the quarter with $13 billion in cash. I think they bought back $1 billion in stock at the right time last quarter. Good job. Most companies buy it back when it's a lot higher. But that $13 billion could be used to buy back more stock in the future, maybe pay another cash dividend. So you have tons of excitement around the quarter, so no surprise the stock is up 14% today. You're looking from a technical perspective, Nvidia likely to keep running higher, especially since Goldman Sachs upgraded the stock to buy today after these results. And I like that note. I read that note at Goldman Sachs and said, hey, we were wrong. We thought we were going to see a deterioration of fundamentals. And not many people downgraded Nvidia on a downturn. So I'll give Goldman Sachs credit there. And they also said, listen, this is our fault. We thought we were going to see a deterioration of fundamentals. We're not. We're going to see growth and accelerate. And usually when they go through that, that trough or that period where they bottom, and you're seeing that acceleration, this stock usually does very, very well. They admitted, hey, you know what? We were wrong to be in the sidelines. However, fundamentally, and this is what you're not hearing on TV, the stock is trading at 56 times earnings. You get 56 times forward earnings. And that includes the revised estimates that almost every analyst adjusted higher today after that quarter. Much, much higher. I mean, they lowered estimates incredibly for the quarter, where it was kind of an easy beat. But again, Nvidia, it wasn't about what they reported this quarter. It's about what they said and how they expect a lot of bottoming out in data centers, gaming, automotive, all this stuff, all the growth going forward. That's why it's moving much higher. But at 56 times forward earnings, 3 times the average stock where it's trading S&P 500, the company is priced for perfection. And when I say perfection, this company is assuming that we're going to see huge growth in autos. I doubt that. Higher interest rates, tougher to get loans. A lot of these companies are going into EVs. They don't have the technology, and they're losing money, most of them, on every new EV they sell. So they're going to have to try to raise prices. Plus, they're seeing demand fall. That's why they're lowering prices. You're not going to see companies like Ford. They're going to say, oh, well, we want to better compete. They don't want to better compete. Nvidia is not lowering their prices to better compete. They have high prices and high margins because they have the best product. So don't listen to the bullshit, oh, we want to better compete. If you have a better product and you're getting that, you're going to get as much as you can for your product. And there's lots of tests. Believe me, they test it everywhere. To seeing less demand and saying, oh, shit, we got to lower our prices. Or everyone's going to continue to buy Teslas. Nvidia is also assuming that gaming has actually bottomed. I hope they're right. But I can tell you, I listened to all the earnings. Activision, Take-Two, EA. Microsoft too, right? Sony. Not one of those companies said that they see gaming bottoming. Not one. And they're in that industry. Nvidia said they see it, though. Maybe they're right. At 56 times earnings, it assumes the insane adoption of AI. You can say, wow, AI, great, huge. I mean, it's assuming that a lot of this growth is going to take place over the next 12 months. It's also assuming that data center, that business has bottomed. Right? They're assuming it's going to accelerate tremendously, that is the big part of their business, which everyone was excited about on the comments that they said. I bet you that's driving the stock at least half of that gain higher. But yet, most of the major cloud companies, Microsoft, Google, Amazon that I listen to, are not expecting cloud to bottom. They're seeing slower growth across the board, every one of them. That's based on their comments. All I'm saying, they're predicting a slowdown in cloud. It's also the reason why you're seeing massive layoffs from most of these large tech companies. So what the companies are saying and what Nvidia is saying is kind of two different things. Nvidia is expecting much more growth in these sectors. The companies that operate within these sectors were not that optimistic. And maybe it's because they can't be that optimistic and lay off employees and cut costs. I don't know. But just something to think about. I don't hear that being mentioned. But for me, I just can't tell you to buy Nvidia here. If you look back when it traded at 330, that's what I love. Whenever you see that trend, that I always like to look companies that have gotten smashed, and I want to see why was it trading at 330? What was so great about it? Well, look where it traded at $330. Okay, that was over a year ago, about 18 months ago, 16 months ago. In that quarter, they reported the company generated $7.6 billion in sales and $1.32 in earnings. That's at its peak. This quarter, it generated $6 billion in sales and 88 cents in earnings. Again, when it was 330, 7.6 billion. This quarter was a little over $6 billion in sales, $1.32 in earnings then, 88 cents in earnings today. And that quarter was back in 2021 where rates were near zero, Fed was printing money like crazy, injecting trillions into the system. Tech probably saw its strongest growth in the history of its history. You never saw stronger growth than that. It's the reason why a lot of these companies, a lot of the majors, hit trillion-dollar valuations. Do you see these same conditions existing over the next 18 months? Where rates are significantly higher than back then? Where Nvidia's largest customers are laying off employees and seeing slower growth? They said they're seeing slower growth. Which means what? They're going to spend less? So again, technically for a trade, you can see the stock run another 10 to 15% higher. But when I look and I think of the downside over the next 12 months, I think it could be about 15%, 20% downside. Especially if they don't put up good quarterly results, because now the expectations are sky high. They were high going in. They're really, really high now. If they have any setback of another quarter, because now all these companies raised their estimates considerably today. Considerably. They haven't done that with Meta. They haven't done that with other stocks. Nvidia, they've raised their estimates. Give me a second here and I'll show you. I mean, this is just Goldman Sachs here. I'm going to pull up. Just want to see where they raised their estimates here. They upgraded to buy on growth reacceleration driven by data center and gaming normalization. So they had their estimate for 2024. Their old estimate was $3.09. Right? So this is 2024. They're reporting like, I think, mid-year 2023. It's fiscal. So their original estimate before this quarter was $3.09. They raised it to $3.65. That is significant. Okay? Expectations are sky high. I'm taking those estimates that everyone raised, and even with those high estimates, that stock is trading at 60 times forward earnings. It's going to trade higher and higher if the stock continues to run here. Think about that if you're buying it. Because like I said, I think the stock could run 10% higher from here, maybe 15% higher. Do you think it's going to hit its all-time high again? I can't see that in this market environment, and not going to. The earnings are what, 30% lower, 35% lower than they were. Revenues $1.5 billion off. I don't see that. But when I see 10, 15% upside and kind of maybe the same, a little bit more downside, I hate that risk-reward profile. And I know I could find at least 5 other chip companies with a better risk-reward profile than Nvidia. Maybe it's not exciting. And I know nobody on TV is saying that right now and say, hey, instead of buying Nvidia here, this is what you should buy. They're like, Nvidia's back. It's back. You got to go crazy. So it's up like 6%, 8%, 10%. Now it's up 14%, right? Whenever you put on TV, everyone foaming at the mouth. I would say something dirty, but I won't. They're just like, oh my God, this is good. You know, I hate seeing analysts. And one thing I learned over my 30-year career, I hate seeing analysts get emotional and exceptionally happy and excited, especially after a stock is up over 50% in less than 2 months. We saw that with oil. A lot of great people said, oil's going to 100, and they were right. And man, they got much, much more bullish when oil went over 100 than they were when oil was at 30. I saw what it come with Northern Dynasty that I bought at 40 cents, went there, saw the project, it was amazing. Okay, it'll never get developed because both sides, Republicans and Democrats, don't want the largest undeveloped copper mine to be, go into production. It'll never happen. But at 40 cents, it was worth it. It went to 320. I went to this meeting. I'll never forget some of the biggest people, several billionaires in this room. I think there was about 40, 50 people having a big party. They all went there. I won't name some of the guys in that room. And, the CEO went up there who I love, and he's just talking about it. Everyone was excited. I remember leaning over to Marin's assistant at the time, this other kid, Marin, who I'm friends with. And I said, I'd be selling this stock right now. And he's like, why? Get out of here. I said, I've never seen someone so excited after the stock went from 40 cents to 320. People tend to get more excited. And right now, the excitement for Nvidia wasn't 3 months ago, wasn't 2 months ago, wasn't even yesterday. The excitement is now with this stock up 14, 15%, where everyone's like, you got to buy it, go in. Be careful. That's usually a sign that you're close to a top. And now Nvidia is a show me stock, where Meta could have reported bad results, and they kind of did. The results were okay, but the stock went up cost cutting because it was down 60%. I get it. But Nvidia right now, this stock is priced for perfection. And you may see that. And even if you see that, I just think that the upside isn't that much for you to buy it here. Especially in a market where growth is going to slow. And it's definitely a different environment when it comes to interest rates and when it comes to overall spending of tech companies. Because all these people that operate in these divisions, they weren't optimistic. I could tell you, I listened to almost all these calls and read the transcripts. They were not optimistic. Yet Nvidia's like, gaming bottom, data centers bottom. AI is going to explode much more. And you might be right on AI, and there's a lot of excitement out there. But still, it's still going to be a relatively small market for now. But just price for perfection. Again, something you're not going to hear on TV. I wouldn't tell you to buy it.